Welcome back, ladies and gentlemen, as we continue our special live coverage of the ongoing regional developments and the broader implications. It is important to examine not only the political and security dimensions, but also the potential economic and business impacts across the region. To help us explore these perspectives, we're now joined in the studio by Mr. Feras Alsalem, the chairman of the Kuwait Business Council in Dubai and the Northern Emirates. Hello, Mr. Alsalem. Thank you for joining us today.
It's a pleasure, Mohammed. Thank you for having me today.
Let's start off with our first question, where from an economic perspective, are we facing a temporary energy crisis, or is this the beginning of a transformation in the global economic system?
Well, it all depends really on how long the war continues. So for now, it is a temporary situation. But as the war or the escalation continues to target critical infrastructure in the oil and gas sector, we're going to see a critical change in the whole energy scene in the region. So we're going to see dysfunction maybe in a number of countries due to the targeting of their infrastructure in terms of energy. So that's going to impact the supplies in the medium and long term, unless there are specific investments in that sector that would compensate and help to have them back online. So it all really depends on what's going to happen in the next few days.
Now, we have seen a disruption in export capacity, as well as a force majeure order that was given. We also saw from Qatar that LNG production has stopped. And we understand that to reproduce or to bring back production online, it will take between 2 to 4 to 6 weeks just to have production at regular levels. Is the fear that this disruption will go beyond export capacity and into actual production capacity?
The specific situation in Qatar, I believe it's very well under control. So they have halted the production conservatively. So they're trying to maintain the assets that they have. Of course, that would take up to 4 weeks to have them back into 100% production capacity. But in other places where there are some minor damages, I think it would take a few months to help to maintain these facilities, to get them up to the production levels. In other facilities, I believe, specifically storage facilities or pipelines, that would take up to a year to fix. So it all depends on the level of damage that we have. Alhamdulillah, in Kuwait, we've announced force majeure. In Saudi Arabia, in Qatar, but it's not something permanent. It's not permanent damage. So when the war ends, hopefully very soon, we'll see production back up in 2-3 weeks.
There is, beyond just the fear of oil and energy markets, we've seen in the UAE the attack on, I believe it's called Jebel Ali port, which is a large commercial port, a large node in the commercial transit. What impact does that have on the region, and maybe particularly in Kuwait's situation?
So the port of Jebel Ali in Dubai is the largest port in the Middle East and one of the largest in the world. It's one of the top 5. So Jebel Ali is a gateway for all of the goods that come in from the east and west to be distributed within the GCC or to other MENA regions, as it is owned and controlled, operated by DP World, which is one of the largest operators of ports globally. So the change in the routes of trade in commodities to the region has created a mess. Most of the cargoes have been shifted now to Saudi Arabia, into Jeddah, into Yanbu, into other ports around the GCC. The GCC system and the interregulations under the GCC Secretariat, and I think it played a major role in, let's say, offsetting the setbacks that we have due to the closure of Strait of Hormuz, let's say the supply chain issues that we usually have in these situations. So I think the discipline that we showed and we demonstrated here in the GCC played a critical role in at least having a good confidence in the system here in the region.
Now, Chairman, to what extent could this war escalate from a regional crisis into a complete and total global economic shock?
So I think we're starting to sense that now initially with the oil prices. So they skyrocketed up to $140 per barrel. We've seen LNG prices in the UK where Qatar supplies are roughly 40 to 50% of that. They even increased more than 50%. So we're starting to see the impact on the end users. We're starting to see what a small minor delay, let's say for a month or so, has done to specific economies, whether they are advanced or emerging economies, whether they're in the Far East or Far West. So the impact is global. It's not a regional crisis anymore. Maybe geographically it's regional, but on an economic scale, it's a global scale. And recent studies indicated that the global impact this year could reach up to 2.2 trillion, which is 1.9% the size of the global economy. So if we look at the growth for the past 2 years, I think that could wipe it out.
That would totally wipe out the growth of the last 2 years, you said.
2 years.
So what is the most serious direct economic threat that is posed to the Gulf states in this current stage?
The most serious threat is the trust in the global, let's say, global system. So there have been many violations to the UN laws, the UN decrees, and that's going to change the whole perception, let's say, for businessmen. So the level of uncertainty is going to be much higher. There's going to be a premium to all of the goods that are in and out from the region. So people are going to pay more for whatever they import, because insurance cost is higher, shipping costs will always be higher, and maybe we'd see people preferring to do some more trading remotely until a permanent solution is found to the region and a permanent stabilization happens.
Now, do you fear that because of the crisis and the threat, as you're mentioning, uncertainty is almost worse than bad news in the commercial and business world? Because of the uncertainty of the Strait of Hormuz, would this almost, I don't want to say abandon, but deprioritize that trade route and open other routes in the region? What do you have to say about that?
Temporarily, yes, of course, but I don't think that would happen on a permanent scale, on a permanent level, because most of the people do live on both sides of the Arabian Gulf. So people are already there. They've been there for hundreds of years. It's difficult to relocate them. So a matter that Strait of Hormuz is not going to be as important as it is right now. It's very difficult to see that coming very soon. But of course, contingency plans need to be drafted up right now, and they need to be implemented as soon as possible for countries like Kuwait, Bahrain, Qatar, that do not have any other access across the Strait of Hormuz. So Oman, the UAE, they do have access. They've managed to invest in their infrastructure to offset any possible setbacks to the closure of Strait of Hormuz. Saudi Arabia as well, due to their strategic location, and they have invested in numerous ports on the west coast of Saudi Arabia. So I think the smaller countries, and even Iraq as a neighboring country, they need to invest as well in a contingency plan.
You actually do make a good point, because all the transit and the commercial infrastructure is set for the Strait of Hormuz to be a vital trade route. So abandoning that would be costly in the long term. Already a lot of investments have been made to ensure that the shipment of oil and goods comes through this strait. Sir, what is the most serious direct economic threat or the most dangerous factor in the crisis? The disruption of the energy supplies, or the erosion of, let's say, market trust and uncertainty?
Let's see, historically, as a GCC countries. So we've been historically the most reliant region for energy exports through many different crises. So there were the 2008 crisis, and there were numerous wars around the region. The countries continued to produce and to compensate any shortage on a global scale. So we have the top 3 producers in the GCC, which is Saudi Arabia, Kuwait, and the UAE. They all have a unique position in the global market. So they have a swing capacity, and they have a spare production capacity that's able to compensate when anything goes wrong in any other region in the world. So when the Libyan crisis happened, we've managed to pump out more oil to compensate that shortage. When the oil production in Nigeria also declined, we've managed to compensate that as well. So from a point of view of trust, I think we have a lot of credibility. And what happened and how the situation escalated in the region, being that we did not have any role with it or anything to do with the escalation, I think we still maintain a large share, or let's say 90% of our credibility in the region. Things happen. Unfortunate events, wars are uncontrollable, but I think we still do have very high credibility in the global markets.
Now, do you believe that because of this credibility and this trust that not just regional, but all international and all players have in our business, in our trade, do you think this credibility will help us to pressure, or let's not say pressure, but to bring the international community together, to bring this conflict to an end?
When we look to that point, when you look at the last UN resolution, the Security Council, we can see the vast majority of the countries of the world, they have sided with the GCC states because they were being targeted without being a part of the escalation. Other than that, we can see the global rating agencies. They have affirmed all of the GCC global outlooks. So we have Kuwait, we have a AA- rating, Qatar AA, and the UAE has a AA as well. They're all stabilized for the current period, even though we have a war going on right next door. So I think that's also another indication on how we have positioned ourselves successfully in this region due to the wisdom of the leaders, their highnesses, the leaders of the GCC countries. It's a very delicate situation. We'd have to handle it very properly in order to come out with the least amount of losses. And I think with the global support, we can see the EU showing full solidarity with the GCC states, our global economic partners and political partners as well. I think we've seen an increasing support for the GCC and an increasing interest in maintaining the sovereignty and defending the critical infrastructure that we have where the whole world depends on it.
And what is your opinion about the GCC's reaction? We've noticed that despite the brutal aggression that's taking place in the region, there was no child tantrum reaction to lash out at Iran or America. In fact, we're taking a very restrained and calm approach to this. What do you have to say about the GCC's response?
Well, I think it's a lesson learned. So whenever a problem comes your way, you'd have to deal it in a different way. I think it's really admirable what we're seeing right now in the GCC leadership. We see them communicating with most of the countries all over the globe. We can see them still believing in diplomacy as a permanent solution to any conflict. We can see them really, and we can see the fruits of their investments in their defense systems, which have also given a great amount of credibility to the locals and the residents in the GCC. So in the GCC we have about 60 million people. Most of them are expats and our friends who live here with us in our own countries. So when we see people living here safely, continuing to work here safely, I think it's also a very big plus to what we are having right now.
And this only reinforces our position of a trusted economic partner to the international community.
Of course. So
with the extent of the risk of the Strait of Hormuz, how, in your view, did the oil industry respond in the initial days?
The oil industry in the beginning, so I think it wasn't really digested very well.
Of course.
So for the first few days, I think traders around the world, they thought it might just be a 2-3 day assault on Iran. Just a quick job to be done and exited, a smooth job, not very complicated.
Well, this was the initial report that the US administration had planned for just a few days of fighting, and then everything would be over by the time the markets opened up again.
Exactly.
But now we're 2 weeks in.
Now we're 2 weeks in, and we could stay for another 2 weeks or maybe a month. We don't know. So right now we're seeing that pricing on the delivery for oil cargoes in May, which we have the prices right now at 140 plus. What happens if it continues into June? We're going to see it above $160, $170. And we're going to see some shortages in the refineries all over the world. A lot of these refineries, specifically in Asia, are designed to accommodate the GCC crudes. So it's medium to heavy crudes. So these quantities, let's say around 20 million barrels per day, it's very difficult to compensate because it's around 20% of the global consumption in terms of oil. Not just that, we do have a lot of these refineries that are going to operate at around 50 or 40% capacity. So when that happens, all of the later industries which are dependent on oil products and refined products, and specifically petrochemicals, fertilizers, even jet fuel, we're going to see a big decline in that activity. And if that happens, of course, it's going to impact everywhere.
There's a lot of fear, specifically about fertilizer, because this will then affect food prices, not just in the region, but across the world. So do the Gulf states currently have viable alternatives to compensate for this disruption in the oil exports? In terms of additional routes, the diversification of income, what do you have to say on that?
In terms of alternative routes, we do have an oil pipeline in the UAE, in the port of Fujairah, and that handles about 1 million barrels of oil per day. And we do have the East-West pipeline in the Kingdom of Saudi Arabia, which starts in the east coast of Saudi Arabia in Abqaiq up until to Yanbu port, and that capacity has been increased to 7 million barrels per day.
To 7 million now?
7 million.
Okay.
It used to be 5 million a long time ago,
yeah.
But with the current leadership of Saudi Arabia, they decided to invest in it for these days. So that shows as well how the region has a long-term sight on what could happen, and to remain as the world's top and most reputable energy supplier.
Now, what is the worst case scenario for the oil markets if this disruption and the navigation through the strait continues to be impaired?
Well, I see that the most challenging situation would be targeting the regional refineries, like what happened in Bahrain, in Bamako. Deterring such critical infrastructure would cost the world a lot of supplies. So we're always talking about the amounts of crude. Not even we're neglecting sometimes the fertilizers, the petrochemicals, and the refined products. So it's much more than 20 million. So we're talking about 5 million barrels extra of different products that could not be shipped through pipelines. So we do have a critical situation, and the cost of manufacturing refined oil products in the GCC and petrochemicals is much cheaper than anywhere else in the world, due to the availability and abundance.
And it's a higher quality of oil compared to other places in the world.
Compared to other places like Venezuela, like Canada, yes, it's of higher quality.
And now, could the oil prices jump to historic highs if this escalation continues? I believe for Kuwait's oil prices, the highest it's ever been was $147 or $148. Could we reach that far? Could we go beyond that? Because we are currently at 143.
I think if the situation escalates and no vessels pass through the Strait of Hormuz, by next week we'll have a new all-time high.
And let's say, worst case scenario, a oil refinery or oil plant somewhere was to be damaged. Its infrastructure was heavily damaged. How long would the repair on these facilities take? I know it'll vary given the different facility, the volume of oil it's producing, but roughly speaking, on average, how long do you think it would take to repair these?
It depends on the operator themselves. So when in 2019 the critical oil infrastructure was sabotaged in Saudi Arabia by Iran, in the eastern province of Saudi Arabia, they've managed to bring it back online in a few days, not more than 10 days.
It's very reassuring.
It's because they're very professional, and it's Aramco, and they're pretty capable to do that, and they have an exceptional position. But and that's upstream. So, but when we talk about downstream facilities, it's much more complicated, and it's difficult to repair and maintain. So I think we're talking about not less than 3 to 6 months to fix any damage.
That's actually very reassuring. Some reports have put it at years, and I'm not an expert myself, but that years seemed a little bit too long, given that we have a knack and an ability to prepare and plan for these worst case scenarios. Do the current high oil prices provide a greater safety for Gulf region budgets, or does the problem of shipment sort of hinder that?
As we mentioned earlier, I believe countries like Oman, partly the UAE, where they can secure a small share of their production bypassing the Strait of Hormuz. And I think the biggest, let's say, maneuvering that has been done was by the Kingdom of Saudi Arabia, because they've managed to invest that in that infrastructure a long time ago. I think that would offset the rising costs and the loss of approximately 20% of their exports. Let's say it's the smallest loser in that sense, followed by Oman, of course, and then the UAE. Of course, they would manage to ship around 33% of their crude production. In Kuwait and Qatar and in Bahrain, we're in a bit of a more difficult situation, and Iraq as well. But I think if the oil prices remain high, there is always going to be a premium on the regional oil prices. That's going to compensate a little bit, but it all depends on how long the war continues.
Sure, sir. To what extent can Gulf financial reserves absorb the shock of this prolonged war? In terms of our investments abroad, any emergency funds we have prepared locally, what do you have to say about that?
Well, talking about the state of Kuwait, we are the highest in terms of foreign assets as a country in all of the rated countries on a global scale by the credit rating agencies. So we have about more than 400% of our GDP in foreign assets. So that gives us a very solid financial position here.
It's a very clever safety net.
Yes, I think we thought about this day a long time ago here in Kuwait. So financially, I don't think that we will have any difficulties financing any of our critical imports for our day-to-day needs. In terms of cash reserves, we can finance, and we can continue 6 to 12 months here in the region in general without any additional income. So I think the cash reserves in the region are very, let's say, very
robust,
solid, very robust, and they are very assuring as well. We have different ways to finance ourselves. We can issue sovereign debt. We are one of the lowest regions in terms of sovereign debt, specifically Kuwait, and we have a very good fiscal situation, and we as well have a lot of let's say tricks in our pockets that we can do with our international investments.
Could you elaborate on some of these tricks?
So we have different investments, some of them which are liquid, and when we want to liquidate, like the U.S. Treasury bills, we can liquidate them without any losses.
Yeah.
Yes, because it's a very liquid market. So let's say Kuwait, we have around $50 billion worth of U.S. Treasury bills, and GCC states have hundreds of billions of dollars, which are easily, let's say, liquidated into and sold in the market.
Now, sir, could the increased defense spending put pressure on public budgets? We did see recently the government in Kuwait has opened a light ammunition production facility. Given the crisis right now, do you think there will be further push into creating our own arms and ammunitions? And what impact will that have on the public budget and spending?
I think in the years to come, we're going to see much more investment in the defense sector here in Kuwait. We've been seeing that for the past 10 years in the region due to regional conflicts as well. We've seen countries like the UAE, like Saudi Arabia, invest heavily in defense arms, manufacturing facilities, strategic partnerships with global manufacturers of arms. I think that's a bit of the strategic approach in which we should pursue here in Kuwait. We should expect some more expenditure on that here from the government in Kuwait, and we should start thinking about more strategic investments here in Kuwait for food security, for defense, critical infrastructure as well, just to accommodate any unfortunate events that may occur in the future.
On the point of food security, we have seen just this last year, the government in Kuwait is pushing for local production in the agricultural sector. Do you believe we're going more towards an autonomous approach being able to stand separate and secluded from other international trade systems. Not to say that we won't participate, but we will not be as dependent and reliant on those. We can participate with the international system, but at the same time have a lot of national security and our own production capability.
I think we're in the early stages of that. We've seen some good initiatives by the government to enable the local farmers, at least to accessing the market. So we're prioritizing the local production. So that's an applauded step that should be credited to the government. I think as well we should direct some more investments. We've had a few initiatives during COVID-19 here in Kuwait to expand our strategic storage capacities by the private sector. I think such initiatives should be announced by the government, planned by the government and executed by the private sector, and the investment should be done as well by the private sector, where they have the expertise, the efficiency to execute, and we've seen their success in a number of regions, not just here in the GCC or locally in Kuwait. And I think it's time as well to start manufacturing critical products, drugs in terms of medication, food, which is mostly imported here in Kuwait,
auto vehicles,
probably auto vehicles, and many other services which we usually import. So I think we really need to start addressing these points in which we can strengthen our local economy.
Now, sir, you mentioned earlier a push towards more military budgeting and funding. Could some Gulf governments be forced to adjust their fiscal policies in light of increased spending in the budget sector?
Due to the current situation, I think there's going to be a lot of commitments that have to be made towards strengthening the local economies and local defense systems. So I think that would impact the external investments in the GCC. So we've always been a net exporter of capital in the GCC and specifically as well in Kuwait. So I think we're going to see less, let's say, of a surplus in terms of international investments, and we're going to see more investments within Kuwait and within the region in these strategic initiatives and projects. So we've been seeing that in Saudi Arabia in the past 10 years and due to Vision 2030. Correct. But I think right now we're going to see that we're going to need a new vision for the whole GCC states and the whole region as a single unit. So we're going to have to see how can we learn from this situation, how can we further enhance our position as a bloc, as a GCC bloc, and we're going to need to see as well our global economic partnership approach. We're going to have to, I believe, form a separate economic, let's say, authority that represents the GCC as an economic bloc. So we have a political representation under the GCC Secretariat, but we do need an economic, let's say, sister entity for the GCC Secretariat that focuses more purely on the economic side and how can we foster our existing economic relationship and enhance it with different countries all over the globe to have it as our aid in times like these.
Now, earlier in our coverage, we were speaking about how this is a transition from a unipolar world to a multipolar world. We see BRICS in East Asia, the G7 primarily in the western part of the world, and now what you're speaking of a Gulf bloc or perhaps an Arab bloc to sort of balance the balance of power between these other two blocs. What do you have to say to the future of that?
I think we would need a specialized entity for us to actively participate. So we've been part of a lot of these organizations on a global scale. We've been participating in many of the global economic initiatives. We've been part of the Silk Belt and Road, Silk Road in China. We've been part of the India Trade Corridor. We've been part of many global let's say, mega economic routes or initiatives, projects. But I think in order for us to really benefit and really, let's say, invest efficiently and benefit in a very strategic manner, we're going to need to have a specific authority that would be able to loop in the whole GCC as a block.
Now, do you believe this crisis provides that opportunity for this own economic bloc to emerge?
I think it's a very good opportunity for us now to execute this idea.
Now, what impact will the war have on the sustainability of economic growth in the Gulf, should it continue?
I think, of course, we're going to have a correction due to the uncertainty. But in the medium to long term, I believe the GCC states will be even more resilient. We've emerged after COVID-19 stronger than pre-COVID. Mm-hmm. We've emerged as a global attraction hub for talented people, high net worth individuals, even people who are looking for a higher quality of life and a stable place to live in. Not to mention as well the favorable tax conditions here in the GCC and other different benefits like central time zones, mm-hmm. Global connectivity. So I think
ease of business, let's say, an easy environment for business.
Ease of business and environment as well. So I think these benefits would not disappear in a day. These, let's say, advantages are here to stay as well. We've invested very greatly in that, and a regional conflict should not really affect that on the long term, maybe just on the short term. Mm-hmm. But and due to our previous experience here in the region, we've managed to sail across all of these challenges here we've seen in the region. The conflicts in the region are not new. They've been here since the 70s and the 80s.
Since the region was here.
So I think we do have a history, a good history on how to deal with them.
Mr. Salem, just hold on to that point. We'll continue our interview momentarily. But ladies and gentlemen, we're going to take a short break and we'll be back to continue our talk with Mr. Feras Alsalem. Welcome back, ladies and gentlemen, to our interview with Mr. Feras Alsalem, the chairman of the Kuwaiti Business Council in Dubai and the Northern Emirates. Now, sir, just earlier you were mentioning that the Gulf has some of the largest wealth funds, sovereign wealth funds in the world. How will changes in our sovereign wealth fund policy affect global financial markets if we're now going to reallocate that capital and resource into the local economies?
So the GCC sovereign wealth funds manage around $4.5 trillion of global assets. That account usually around 30% of the global sovereign wealth fund values. So we have accumulated that wealth through long-term investments through decades. Mm-hmm. With the current situations, I think we're going to allocate some more investments locally, and that would impact the deal flow towards the international market. So last year we've seen around $120 billion worth of deals, mm-hmm. that have been executed by GCC sovereign wealth funds, and approximately half of that has been in the US. So we're talking about 55 to $60 billion of direct investments in the US, either through direct investments or through global asset managers and indirect investments as well. So I think it's a pretty large share. Of course, the US market accommodates much more than these investments, but we're going to see, I believe, a decline in that due to the current situations, due to the requirements of specific funds to deal with the needs of local economies, to balance the balance sheets as well of the local governments. I think it's a critical time. Mm-hmm. It may affect our investments abroad in a short term, but historically, even through the multiple crises, around the world, the GCC has remained a long-term and reputable investor in the global economies.
Now, could you explain to the viewers at home how sovereign wealth funds become the first line of financial defense in the face of these crises?
When we look at the case study of the state of Kuwait, so the Future Generations Fund was like the piggy bank of the government at the time. So they wanted a reserve where they could tap into in difficult times to continue operating the government and funding the government's operations.
Mm-hmm.
So, and it was for the specific basic needs for Kuwait, the imports of food, the import of critical material for the development of Kuwait in its early stages of independence. So I think each sovereign wealth fund has its own philosophy and mandate. Kuwait, we have that specific mandate. It's a reserve for the future generations and the preservation of the welfare of the state of Kuwait. The Public Investment Fund in Saudi Arabia has a different mandate.
Mm-hmm.
So they are focusing more on the development and enablement of Saudi as a regional and global economic powerhouse. In Qatar, it's a bit closer towards the Kuwaiti model,
mm-hmm.
plus with a twist. So it's a bit more of strategic investments, enabling specific sectors in the country, a lot of investments in sports, to help create Qatar as a global sports hub. And in the UAE as well, they have a different story. Each emirate has its own sovereign wealth fund. So you have the Dubai Investment Corporation. They invest mostly locally and a good share abroad as well, but they want to enable their services sector as a global prominent service provider in terms of aviation, in terms of logistics, in terms of hospitality as well. So I think let's say the closest two examples of sovereign wealth funds are Abu Dhabi and Kuwait, and then closely followed by Qatar.
Mm-hmm.
So I think these three sovereign wealth funds will have to consider a bit their investments that have been implemented in the past few years to accommodate the changes that we just saw here in the region. Maybe as well a bit in PIF. But in general, I believe, let's say not less than 70% of their earlier plans and commitments will continue.
About 70% of the earlier plans will continue?
Will continue.
That's a very reassuring, that's a very high percentage.
I think because we have a large surplus of wealth, alhamdulillah, in the region. So unless you have to reconstruct your country, you won't need to withdraw a lot of wealth from these financial markets. And alhamdulillah, in the region, all of the damage is still minor damage, alhamdulillah. And let's hope that it remains the same. So I don't think we're going to see huge withdrawals from the sovereign wealth fund reserves abroad.
Now, do you see our experience during the brutal Iraqi invasion and the subsequent liberation? Do you think that we have carried lessons from that, or has our wise planning been in place in terms of spending our sovereign wealth fund and how to deal with the surplus and how to allocate these resources? Has this been the case since the beginning of Kuwait, or do we take a lot of lessons from the invasion?
I think in Kuwait we've learned from the Iraqi occupation of Kuwait and that situation that happened. It was a unique situation. The government recently announced the authorization for the central bank and KIA, Kuwait Investment Authority, to issue government bonds and new debt notes to fund the possible requirements in the upcoming situation that we see right now, which is I believe a smart move.
This is a proactive move.
A proactive and smart move to help provide liquidity for the required services and required expenditures of the government, instead of selling our assets and liquidating them in the current situation. So it's, when there is uncertainty, it's not a seller's market in terms of global financial markets. So you'd like to sell in favorable conditions as an investor. So if it's an unfavorable condition and you have a very low cost of borrowing, as we, alhamdulillah, have here and enjoy here in Kuwait and in the GCC due to our high credit rating, I think it's always best to issue debt than sell off your assets.
So you'd say that there is a sort of a business savvy, calm, cool, and collected attitude and approach to this crisis?
I think that reflected on the Kuwait Stock Exchange. So we can see that it has been very resilient throughout these past couple of weeks. All of the major stocks are still maintaining their share prices. The market has been seeing acceptable levels of liquidity. So I think it's the momentum of the stock market is still there due to the aforementioned points that no critical damage has been done, alhamdulillah, to our infrastructure. Business still continues to operate due to the strong trust of the people here in Kuwait to the government and the relative authorities.
Now, I know you've touched on this earlier during the interview, but how do you interpret the response the Gulf countries have had to the military action, both politically, militarily, socially, and economically?
So I think the defense systems in the GCC are doing a great job. They have been very assuring, and they show the capabilities of the GCC states to defend themselves by their own without a lot of foreign intervention. So I think that demonstrated a good, let's say, and comfortable level of trust in the local systems in difficult times. The different alternatives in terms of logistics bottlenecks that we have seen due to the closure of Strait of Hormuz, I think that as well has increased the let's say the trust in the GCC states as a united bloc of countries. And I think as well the bilateral cooperation between the GCC neighbors, like we've seen with Saudi Arabia, the operation of Gaisuma Airport for a private Kuwaiti carrier, that signals a very positive sign to the extent of collaboration between the two states, the two countries.
The extent of trust.
The extent of trust and the willingness to support in difficult times. So I think that all had a great role in let's say comforting the local businesses and the local investors here in the region, and the calm tone that we've seen and the, let's say, the commitment towards diplomacy and having an open dialogue even with countries that have assaulted us. So I think that shows very high discipline on how to manage these unfortunate incidents.
Now, you mentioned the trust and cooperation between the Kingdom of Saudi Arabia and Kuwait. How does the market volatility reflect genuine investor fear, or does this cooperation between the Gulf states, let's say, reinforces their trust to counteract this volatility we're experiencing?
I think yes, it does reinforce. It shows that there is regional solidarity, regional cooperation. It shows that you're not in the battlefield on your own. So I think yes, the GCC solidarity was the main pillar for for maintaining the local economy and maintaining the local trust.
Now, Mr. Alsalem, could we witness a temporary outflow of foreign capital from the region? As we were speaking about earlier, we could reallocate funds and cash into the region as a sort of buffer. How would this impact the global market as a whole?
Well, we have an Arabic saying for investments. So we say Ras al Mal Jaban. So like capital is in somewhat the owner, it shows cowardice some way. Okay. So you're always afraid. You're afraid of losses, and you want to take care of your money. So there is always hot liquidity moving in and out of markets, whether it's in equities, stocks, or other instruments of investment. So let's say that we'll always see, whether it's a situation like this or even a smaller situation, or even just a regulatory change. So we'll always see that. that's going to be there. It depends on the situation and
the severity of the crisis.
The severity of the crisis. So it changes from situation to another, but that's always there. As a concept, it's always there. So looking at that concept itself, I think yes, we're going to see an outflow of investments, but we won't see a big drain of investments on the long term. So I think the GCC systems have very well established themselves on a global standard. The region still has a lot to offer, and we do not see such offerings in a lot of geographical positions all over the globe.
See, now that brings us to the next question. Because of this international standing and system that we have, a very robust and proven and trusted system, could some Gulf states become havens for capital seeking stability?
The Gulf states are already havens, but I think we're going to see a bit of a reshuffling right now, maybe more towards places like Saudi Arabia.
Okay.
So Saudi Arabia emerged, or let's say reassured its position as the main pillar of stability in the GCC region, in the Arabian Peninsula and the Arabian Gulf region. So I think the calm way they've managed this situation, the support they've provided to all of the GCC states, I think that is going to comfortably, let's say, invite a lot of investors, specifically in the region, to invest in more strategic projects in Saudi Arabia.
And now, to what extent can the local and institutional investors in the Gulf region stabilize the markets? What instruments and mechanisms do they have available?
Well, I think we could see in the stock market some government intervention, providing liquidity, purchasing maybe devalued assets, correcting their valuations to a normal valuation. I think, and we've seen that in a number of crises. We've seen the KIA intervene through its local equities fund here in the Kuwait stock market. We've seen that in Saudi Arabia. We've seen that in the UAE. So if it goes, if this current situation prolongs even further, I think we're going to see that in the local stock markets. In terms of liquidity in the market, yes, the governments, alhamdulillah, are pretty rich, one of the richest in the world. They do have that extra capacity to provide liquidity in the market, even when foreign capital in the forms of deposits do leave the banking systems in the region. So the liquidity can be provided by the GCC states and the GCC central banks. They have a good reserve of foreign currencies, a good reserve of gold. They have a big sovereign wealth fund in the four rich GCC states. So I think we're in a financially solid position, and we have our own buffers that we still didn't utilize here in the region. And I think that it's a sign of stability, and I think we have planned pretty well for days like these.
Now, you mentioned gold, and this may be a bit of a sidetrack or a tangent in our discussion, but we haven't seen gold respond as we typically would expect it to in this crisis. It's moved up a little bit, but not what people were expecting. In terms of crises of wars, the price of gold and silver will skyrocket. However, we've seen it sort of hover over this $5,100, $5,200 mark. What is your opinion on this?
Well, I think because gold already appreciated very much over the past 2 years, specifically 2 to 3 years, and the prices of silver as well. So I think we've reached a pretty high level.
Would you say this is the peak of the price?
I don't know.
It's difficult to say. It's difficult to speculate.
It's difficult to say. I'm not a gold expert, but I think it's the appreciation has already factored in the global uncertainty in terms of the global economy.
Okay. How resilient is the Gulf banking sector to this potential economic hit from this crisis?
Well, the Gulf banking sector is pretty diverse. We have GCC financial institutions which have a global presence and operation through many different countries. So I think we do have a diverse background and diverse investments in our banking sectors, and we're not directly exposed to the current escalation in terms of financial institutions. So we don't have any exposure to Iranian or Iraqi debt, let's say.
Yes.
Not a lot of financial interaction between our systems and their systems.
We've isolated ourselves from any risky markets in the
and
region.
The GCC central banks have always been very conservative on how the GCC or each member state's banks are exposed in terms of regional risk. So as a banking sector, you're a bit more conservative than other sectors in the economy. So in the GCC and specifically Kuwait, we've been very risk averse. We did not have historically a high appetite for risky investments in the specifically in the region. So we've mostly been affiliated with investments and interaction with the global financial markets, global investments in advanced markets, not into the emerging or, let's say, less advanced regional markets.
So sort of a safer and reassured investment.
Exactly.
Now, you have touched on this before, but if you could elaborate more, to what extent can the Gulf central banks intervene to maintain financial stability?
Well, as we mentioned earlier, I believe that they have the capability and capacity to stabilize the monetary market in the GCC pretty well. So they can provide any deficit, and they can cover any deficit that is in the local banking systems pretty well. Each state has its own different capacity, but I think as in Kuwait and the UAE specifically, we have pretty high levels of assurances from the central banks.
Now, this may be a bit of a worrying question, and I believe throughout our interview and discussion here, you've given a lot of reassurance to people at home that the government, the Gulf region as a whole, has a lot of plans and mechanisms and tools available to them. But could this war trigger a new wave of inflation in the Gulf area?
Of course, yes. We're going to see inflation because we are also importers of many services and many commodities. So, and they are also interlinked with the oil and gas prices due to these two commodities being a component in their manufacturing process, or let's say freight process or transportation process. So that's all going to be factored in what we import. So we're going to import a lot of inflated prices in the GCC region, maybe a bit more in Kuwait and in Qatar than other places. But yes, we're going to see. Of course, there are risks to what's happening right now in the region. There is risk towards the infrastructure. There is risk, but we're still talking at the current situation.
Yes.
So, and the current situation is still not that bad. We're still in a good situation, and we're still in an assuring position in terms of the local economies.
Now, to what extent is the Gulf reliance on food imports a vulnerability in terms of this crisis right now? We import about 70 or 80% on average across the Gulf of our food. So how is this a vulnerable issue to us?
The GCC states have invested in food security entities in Africa and Asia. So let's say on paper we do import about 70 to 80%, but we do have our own lines of food production, specifically for raw materials, raw food materials, unprocessed materials, in which we can get these food products directly and food commodities directly from plantations that are owned by the GCC states. So we do have a backup plan. Maybe we couldn't accommodate the whole 70 or 80% of our consumption, but we're starting to see in the past 5-6 years a lot of initiatives by the GCC government. So there is an initiative by the Saudi government. It's called SALIC, and The government has acquired strategic stakes in fishery companies, in dairy companies, in flour mills, different companies, and to enable them to expand their production capacities at whatever cost, just to secure their local food security. So I think we in Kuwait should follow a similar approach to the SALEC project in Saudi Arabia, and we should have a similar entity to Al-Zahra company, which is in Abu Dhabi, a food security company. So we've seen strong models in the GCC, successful models like the two models that we have mentioned right now. I think other GCC states should follow suit as well, as the previous proposal, like an economic entity could have a food security project under its umbrella. So I think there is much more we can do. Let's say we're in a good position for now, but I think there is much more we can do to become a more resilient group of countries.
Now let's quickly touch on the tourism and transportation industries. What is the impact of airports and port disruptions going to have on the global supply chains as well as on tourism in the region?
Of course, the disruption of the airports operations in the region, and us in the GCC, specifically in the UAE and in Qatar, being regional air transportation hubs and airline hubs, global airline hubs, not just regional anymore. So I think it affected tourism very much, specifically in this time of year. I think the disruption is going to affect the hospitality sector pretty clearly. So we're talking about a time of year when the weather is
it's a nice weather.
It's a bit more acceptable.
Yes.
Yeah, and it's nice. So I think it's definitely going to impact tourism, because tourism, of course, is let's say a sector or a business of more of a choice. So it's people choose to travel to go there. It's not like a business trip or anything else like that. So of course, when there is any crisis or war, people wouldn't really want to go to.
They'll avoid the area.
They did avoid the area. But I think maybe a year or two we'd see a good recovery in that when the region stabilizes. Let's see.
Inshallah. Now, we're quickly running out of time, so I'll just ask you two more questions. Could rising fuel and insurance costs fundamentally alter the aviation industry and the tourism industry as a whole?
Well, there was a study in the US for the US airlines. Well, the study showed that only 3 of the US airlines will be able to make profits in the current prices, and that's in the US. I think we're going to see
a similar situation.
A similar situation for Asian carriers, probably even, of course, regional carriers are going to suffer some losses. But maybe the larger and more profitable ones will just have a reduction in their profits. But we'll see these losses not just in the US for some US carriers. We'll see them in Asia as well, and even in Europe.
Now, Mr. Salem, before we let you go, I'd just like to ask for what you anticipate that will happen, that will come to this region, and how do you see a recovery process taking place?
I believe that the current situation is a wake-up call, not just for the region, for the whole world. We've always talked about the closure of Strait of Hormuz, and
it's happened.
It happened now. We've always thought that there might be a direct military engagement between the occupational forces in Israel and Iran, and that has happened directly twice now. So I think we're going to have to really go for new measures to fortify our countries and economies, and to really invest seriously into strategic sectors, as you mentioned before, defense sectors, food security, logistics, let's say, contingency plans for our oil exports. I think that's what we're going to see pretty seriously in the upcoming times, inshallah, when this war is all over.
Mr. Alsalem, I'd like to thank you once again for joining us in this coverage and shedding light on the economic impact this will have on just regular people, the regional economy, and the global economy as a whole, sir.
Thank you very much, Mohammed. The pleasure is all mine. Thank you.
Ladies and gentlemen, that was Mr. Feras Alsalem, the chairman of the Kuwait Business Council in Dubai and the Northern Emirates. Ladies and gentlemen, we'll continue our special live coverage after this short break.